Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we go into a new week here, all eyes are going to be on President Donald Trump's health after he announced last week that he tested positive for COVID-19. And now we only have 30 days to go before the election. And reports of President Donald Trump's health will almost definitely be driving the markets. Now, a month before the election day, with the president in hospital, there are a number of different scenarios that could come into play here and have a huge impact on the markets in the run-up to the elections. One of those is that President Trump simply makes a swift recovery, which would of course send a strong message to the markets and help his election campaign to recover. Now, at the other extreme end is the possibility that President Donald Trump becomes incapacitated, and in such a scenario, then Vice President Mike Pence, he would be sworn in, and there could be pressure to postpone the election, something which has never happened before. Another scenario would include the possibility of President Donald Trump standing down should his health deteriorate and the Republican Party having to choose another candidate, and someone who potentially might have a better chance of beating Joe Biden. So traders will be weighing up the possibility of all these potential outcomes, bracing for higher than usual volatility over October, November and December, and questions have now arisen over whether the second presidential debate scheduled to take place on October the 15th, whether this will go ahead or not. Elsewhere, Federal Reserve Chairman Jerome Powell, he's scheduled to speak on Tuesday to the National Association of Business Economists, where he's expected to plug the benefits of a new stimulus package. And also we have the minutes of the FOMC scheduled for Wednesday, which will give traders some clues into the Fed's new long-term monetary policy strategy. So if you do want to be thriving in these market conditions, you need to be nimble, adaptable and able to utilize a research-driven approach to the markets. This is where data is power, and that's where you'll get the ultimate edge to capitalize on these big moves. It doesn't matter if the markets go up, down or sideways. You want to make sure that you're getting that accuracy and precision, and that you're trading on the same side as the hedge funds, the money managers, the institutions and the professional traders in the markets. This is where technical analysis, outdated technical indicators, they're not going to work in these very heavy macroeconomic conditions. If you're just relying on technical analysis and outdated technical indicators, it's just not going to give you any sort of an edge in the markets. This is where the retail traders, they continue to get chopped up. They FOMO into too many trades. They miss out on many opportunities in one of the best years that we've seen here in 2020 for trading. With all of this volatility, it has presented some huge opportunities in the commodity markets this year. You can see that from silver prices up over 50% in the latest quarter. Gold prices so far this year, they're up 25%. They've broken out to all-time highs this year. We've also seen palladium prices double off the lows that were hit over the course of March, and we've seen some exceptional moves here for platinum just in the latest week. And of course, the greater the data and intelligence you have, that's where you're going to have a greater edge in the markets. You want to know how the hedge funds, the banks, they're positioning themselves week to week in the markets, where they're buying, where they're selling in real time, so you can get your timing precise institutional data to track capital flows, so you know where the smart money is going. Knowing also the key liquidity zones, fundamentals, macro intelligence, seasonal cycles, the intermarket correlations, this will all help you massively to trade the same way as professional traders, utilizing a research-driven approach in the market. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we move into a new week. Firstly, let's move over to the energies, then we'll go over to the metals as well. On crude oil here, on Thursday and Friday, we've seen over a 7% decline in prices. This needs to be understood in the context of as soon as it was announced that Donald Trump had COVID-19, we saw stock markets tumble, and this also saw a correlated move here with crude oil. Many of the policies which Joe Biden is in favor of do not benefit crude oil. So if Donald Trump is to win, the overall expectation would be that crude oil would get well supported. A Joe Biden win would be negative for crude oil, and you can see immediately how this has impacted the markets. We've seen a very sudden sell-off back towards 37 US dollars per barrel. In fact, we're right back at the swing lows here from the beginning of September. So I would watch this very closely going into next week. If you do see Donald Trump make a fast recovery, this is where oil prices could quickly rebound in price and we could easily come back to test $40 per barrel if we see that sort of positive sentiment in the market. On the flip side, if we see more negative headline news regarding Donald Trump continuing to undergo treatment and that he's not responding well, in that scenario, this is where you can expect oil prices to break down further, offering further opportunities to sell short this market and look at certainly a break back below the recent swing lows. This will help you very much from a risk on or risk off point of view. So what we saw also over Thursday and Friday, as we started to see capital come out of global equity markets, this was favorable for the dollar. And this is where we've seen an increase to the upside. Certainly in the last couple of weeks here, the US dollar has been able to break out to 2-month highs. Watch this market too. Very simply, at the moment, we have a bull flag formation on the dollar. If we were to see continued pressure on equity markets next week and we see a risk off environment, this is where the dollar will respond well. You get a breakout to the upside, and this is where the S&P 500, the Nasdaq, the Dow Jones, they will be under pressure, and this is what would likely drive the dollar higher, and that's what you want to look out for. In that scenario, this is where you could then see pressure to the downside effectively on gold, on silver, on platinum, and so forth. So you want to look out for those intermarket correlations. On the flip side of that, if the dollar was to break down, we move back into risk on. If there's positive news regarding Donald Trump, this is where you could then see a sell-off on the dollar. So you need to be keeping a very close eye on the macros going into next week here. So then moving back over to the metals here. So we in fact banked on Friday 390 points here on platinum. That's alongside the profits that we banked at the beginning of the week just before the presidential debate for 715 points across gold, silver and platinum, and we also banked another 90 points on crude oil on Thursday as well. So effectively we banked over 1,000 points here in the latest week on commodities, and of course for every one lot traded, that's over $10,000. For every 10 lots traded, that's over $100,000. Now moving into next week here, it's interesting on the metals. So platinum closed limit down on the day, so it closed right at the daily lows. Hedge funds and money managers, they did trim their net long positions in platinum in the latest week. In fact, more so than gold and silver and palladium. Funds increased their net longs on gold in the latest week, but they trimmed their longs on platinum here. So essentially we've banked further profits here on platinum before we start to see it break down. We still do have some exposure on this market which is in profit going into next week, but we want to be observing whether the dollar does get a further bid next week and whether that might put some pressure on the metals here to the downside. So I can't rule that out. If you look at last week's week ahead commodity report, at that point this is where we've been building into positions on gold, on silver, on platinum and also on palladium, and all of those markets broke out in the last week here, so it worked out perfectly. Again, feel free to go back and watch that analysis. We talked about the bull flags where we're expecting breakouts. I'll just show you that. So particularly palladium, well done to everybody who caught this move. We're in fact still up over our two positions, up over 3,000 points on those two trades, which is quite significant. Now if you have a look at palladium, again we discussed this last week, our anticipation was all these high wicks we had on the daily, we were expecting a break above the neckline and then a bull flag formation, a continuation back to the swing highs. That's effectively what we saw on palladium in the latest week, so well done to everybody who was able to catch that move. Gold as well, we mentioned this before, came back down, tested $1,850 per ounce 3 times here, faked out lots of traders who panic sold out of their positions. This is where we continue to stay with our long position on gold. We banked partial profits on that ahead of the election debate there on Tuesday. Also bear in mind next week it's the Gold of China week holiday, so with that China are going to be off the whole of next week, and typically during the Asia Pacific session that means that the metals do not get much of a bid. There's not much liquidity during that session from China, and as a result that can in fact put some pressure to the downside on the metals, but it is at a decision point as well. It's whether gold can full on continue this momentum, break above the swing high from Friday to get above 1920 and then make a move back to around the 1950 zone here, or whether gold is going to be under pressure if the dollar catches a bid next week and we do see the usual sell-off that you could get during the China Golden Week holidays here. That's where gold could be under pressure and retest the swing high. So the name of the game next week is going to be trading the ranges here on gold, looking at the macroeconomics and keeping a very close eye also on the speech from Jerome Powell on Tuesday and minutes from the FOMC on Wednesday. These can all be big catalysts for the next moves here on the metals. That then brings me over to silver as well. Silver's price action again, we do still maintain our position that we took the previous week, which right now is currently up just over 75 points at the moment. That position is protected with bank partial profits on that. We're keeping some exposure going into next week, but again, silver has some vulnerability here. If it was to break back below the lows here from Tuesday, Wednesday, Thursday and Friday, it sets up for a bear flag where you could retest again the lower end of this channel. I can't rule that out, but if silver is able to gain some additional momentum to the upside, if it can break above the highs here from the last week, that's where we should pop up and hit that 25 US dollar per ounce level. So we're in a good situation here where we have some exposure on silver. Our trade is protected with banked partial profit, so if it breaks out further, we'll benefit. If it does pull back, the trade is protected anyway, and then we'll look at fresh opportunities to reload on this market. So again, you want to keep a very close eye on the dollar and whether we move into risk on or risk off going into next week. And of course, the latest developments too with Donald Trump's recovery will be very important for a lot of the intermarket correlations as we move into next week. And of course, if you would like to learn a research-driven approach to the markets where you're going to be trading the same way that the hedge funds, the money managers, the institutions, the banks do, where you have an edge in the market, where you're utilizing data, market intelligence, the cycles, you're aware of their positioning, the key areas of liquidity that they are targeting. This enables you to be much more precise with your entries, with your exits, making sure that you're not getting chopped up like the majority of retail traders out there, but then you actually have an edge in the markets where you can utilize the research-driven approach to capitalize on these market conditions right now, which are absolutely perfect for trading. So with that, if you would like to join a community of successful traders, there is an opportunity for you to do so. You get access to our exclusive live trading room webinars. You also have access to our real-time trade alerts, trading research and market insights, access to our private members academy membership site, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.